Welcome, welcome, welcome. We're just waiting for a few more people to log in. I want to say thank you guys for choosing to spend your time with us. I'm Evantz Saint-Gerard, and I want to introduce our panelists. First up, we have Bill Donofrio. Bill, say hi to the people.
Hi.
Next up, we have Andrew Jaloza.
Hello, everyone. Welcome.
And right beside him is Dean Graber.
Hi, everybody. Thanks for being here tonight.
And then we also have Tushanna Manram.
Hi, everyone.
And of course, we cannot have this possible without the Wizard of Oz, the person behind the scenes, Tiffany. Tiffany, say hi to the people.
Hello, people.
All right, folks. So with that being said, I want to say thank you for choosing to spend your time with us. We're going to be talking about, it's called Ask the Pros. Is it true what they say about reverse mortgages? We're going to be talking about reverse mortgages. We're going to be talking about estate planning, wills, trust, all that stuff, and also how this all relates to your real estate. With that being said, Bill, the floor is all yours.
Terrific. So Evans asked me today, so is it true what they say about reverse mortgages? And to that I say, Evantz Saint-Gerard,
It's true.
You can't handle the truth. So in case you haven't seen, Evans and I are both movie buffs, and we share a very similar sense of humor. So once again, and just as Evans said, thank you very much for spending time with us tonight and learning a little bit about reverse mortgages, trusts and estates, and how they can promote and keep you in the home. So here we go. A little bit about myself. I've done nothing but reverse mortgages for the past 11 years. All right. I don't know anything about any other type of mortgage. Don't ask me. I will give you one of those. I just don't know. But I do specialize in reverse mortgages, and that is all my company does as well. Absolutely love what I do. Live in Queens, lived here all my life. And when I'm not speaking with borrowers, you can find me on my couch, watching TV with my wife and our beautiful bulldog, Fiona Louise. So we're going to be talking primarily about the government-insured reverse mortgages. That they're insured by the FHA. I'm going to give you a brief history of them because I think it's going to shed a lot of light on the misconceptions that are still around today. Reverse mortgages actually started in 1961, a small town in Maine. And what used to happen was the borrower used to sign over their home for a relatively small amount of money, and the bank then owned the home. And it was awful. It was just an awful program. And what would happen is this, in particularly with second spouses, often the second spouse would not be on the deed. So if the borrower passed, what would happen is the widow, the grieving widow, would be kicked out of the home. And that's a misconception that still lasts to the day, because that doesn't happen anymore. And that hasn't happened since 1989, when the reverse mortgage program was brought under the auspices of the FHA. So now, what had happened was this. It started in 1988. Ronald Reagan was president, and he saw that seniors weren't able to make ends meet. All right. But what he also saw was that seniors had a lot of home equity that was just sitting on the sidelines. So he wanted to give them access safely to the equity that is built up in their home, so that they can use that money and be more secure financially. So the reverse mortgage, there are many benefits to them. One of them, all right, you don't have to make a mortgage payment. You get a reverse mortgage. You do not need to make a mortgage payment. You do have some financial responsibilities, and I'll get into them. But picture, you get a reverse mortgage, you're not making a mortgage payment, and then your cash flow instantly gets a whole lot better, right? Also, there is a credit line with a reverse mortgage, and that credit line grows year over year. And that's a very important component of the reverse mortgage, because what it does, it this amount keeps growing and growing. This is your credit line. The amount of money you can take is going to grow. And this grows regardless of what happens to your property value. Your property value can actually go down and your credit line will still go up. So it's a very, very cool program in that regard. So, like I said, I've been doing them for 11 years. It's all I do. My wife calls me, I'm an idiot savant. My wife calls me half an idiot savant. I don't know which half she's referring to. I guess we'll just leave that a mystery. All right. So reverse mortgages, how do they work? All right. Well, they're highly regulated by the FHA. All right. So, and that's a really good thing, because what was happening was seniors were getting taken advantage of beforehand. And now the FHA, because they insure all of these loans, they tell us as an industry how much we can lend to someone. And it's based on a few factors. One is the value of the home. Other is the age of the borrower. So, and once again, it's very, very safe for seniors. There are plenty of safeguards, which I'll go into in a little while. What can you use a reverse mortgage for? Well, about half of the loans that I do, I'm paying off some sort of a mortgage. All right. So it's funny, when I'm not speaking with borrowers directly, I'm educating financial planners, financial professionals on reverse mortgages. And I will often ask them, why don't you refer reverse mortgages to your clients? I will always get an answer of they're too risky. Always. Like I know my name, this response is coming. So I'll give a true story. Someone said they're too risky. And I said, what do you mean by that? He said, well, one of my clients had a reverse mortgage and they lost their house. I said, how'd that happen? He goes, they didn't pay their taxes. I go, oh, okay. I said, what if they had a traditional mortgage and they didn't pay their real estate taxes? What would happen? He said, they'd lose their house. I go, yeah. I go, what if they had no mortgage at all and they didn't pay their taxes? What would happen then? He goes, they'd lose their house. I go, so how is this the fault of a reverse mortgage? So, you talk about risk and you talk about danger. You know what's dangerous? Having a mandatory mortgage payment. It's kind of crazy to do that, in my opinion.
Phil, can I suggest something right there? Is there an age limit for how to get it, for when you cannot get a reverse mortgage?
Absolutely. Foreseer of the future. It's coming up in about 2 minutes. It's age 62. One of the borrowers needs to be at least age 62. But thank you. So yeah, it is really dangerous. And with a reverse mortgage, you can make a payment whenever you want. It's just not mandatory. As long as you pay your real estate tax, your homeowner's insurance, you live in the home as your primary residence, and you perform basic maintenance on the home, you can stay in your home for as long as you want, regardless of how much you owe on the home relative to the value. So it's a layer of safety for people that, you can pay it down, and there are benefits to paying it down. And we can get into that a little bit later on. You can use the money from a reverse mortgage to pay off high interest credit cards. I just saw something where credit cards are climbing up very close to 30%. Most of the average credit card rate right now is 24 point. Do the math. We're a lot better than that. So it just gives you more financial control. It can help with large expenditures. You need repairs on your home, a boiler goes, you need a roof. So you don't have to deplete your other holdings, your other assets. Take it from the home, right? Also, two very popular reasons for reverse mortgages these days, aging in place. All right, absolutely. Aging in place, performing repairs on your home to make it more age friendly. And also the biggest one right now is paying for in-home care. Right. You can also use the proceeds from a reverse mortgage to purchase a home, which we'll go into in a little while. Right. So, Dean, how old does someone need to be to get a reverse mortgage?
I think you said 62.
That's very good. Very
I was
good.
listening.
Yeah. So there are some loans where they're called jumbo loans. They're not insured by the FHA. And we can lend up to $4 million on these loans. And you can be 60 years old in the state of New York. But we're going to concentrate mainly on the government insured, what are known as HECM loans, HECM, which stands for Home Equity Conversion Mortgage. Right? So you also need to have you need to qualify for a reverse mortgage. It's a lot easier to qualify for a reverse mortgage than a traditional, for the very simple reason that there are no payments necessary on a reverse. So I frequently qualify people just based on Social Security income, which is very good. You know, it's an easy loan to get. So you need enough income to pay your real estate tax, your homeowner's insurance, have a little bit of money, to eat. But it's a very low income bar. And you need to have a fairly good record with the payment of credit cards, installment loans, real estate tax, and homeowner's insurance. So we don't look at credit scores. We look at a payment history of 2 years only. And lastly, you need to have sufficient equity in your home in order to do the reverse. So if we're paying off an existing mortgage, we have to be able to lend you enough to pay that off. All right. So what kind of properties are eligible? Single family homes, no problem at all. All right. Do those all day long. We can do 2 to 4 family homes also, providing that our borrower lives in one of the units, all right, which is good also. Not a lot of people know that. And also we can do condominiums, providing their bylaws are acceptable to the FHA. My company has a team of people, and all they do all the live long day is get condos approved. I'm sure that's mind-numbing work, but they do it well. Right? So how does the FHA determine how much we can lend? So what they do is it's a little formula that they have, and depending on your age and interest rate, they will lend a percentage of value of your home. So right now the lending limit goes up to about 1.1 million in terms of value. So just throwing a number out there, and we're going on today's situation. If someone is 70 years old, they can borrow approximately 40% of the value of their home. All right. So $1 million home, they can borrow about 400,000. If we're not paying off a mortgage and they have a $400,000 pile that they can use, that 400,000 grows at the same rate of interest. So you can picture this. Let's say you have a loan balance of about 30,000 and it's going up by 7.5%, 8%. But this 400,000, this is going up at 8% also. So this is going up by about 2,000. Meanwhile, this is growing by about 32,000. So it's a pretty good time to get a reverse mortgage, depending on your situation. Right. So obviously, we look at home value. Home value is very important in determining the amount that can borrow. Protections. The FHA built in protections for reverse mortgage borrowers, and they go throughout the process. every reverse mortgage borrower needs to be counseled by an FHA-approved counselor prior to incurring any costs. So basically, before we submit this loan, the borrowers need to be counseled. And the counselors, it's a great part of the process. It takes about an hour or so. And these counselors work for the borrower. They don't work for me. They can go to any counselor they want. And it's important. That's really important because they're a disinterested third party. So if I always tell my borrowers, look, if I've said anything to you that sounds too good to be true, or if I didn't connect dots for you along the way, please ask the counselor. And the counselor is going to tell you that they're getting paid regardless of whether the loan goes through or not. That being said, I always go straight down the line with whatever I do. Also, one of the real big benefits of a reverse mortgage is that it is a non-recourse loan. All right, let me drill down on that for a second. It means that you have no personal liability for it. All right, it means that you or your heirs will never owe more than that property is worth. All right, even if, let's say, I always give the example of Flint, Michigan, where if someone got a reverse mortgage when their house was $600,000, and let's say their loan balance got to maybe $300,000, then they found lead in the water, and now that home is only worth $100,000. So if they settled the loan there, the borrowers or their family would not be responsible for that $200,000 difference. That's where the FHA insurance comes in. So the FHA insurance, it does several things. One, it provides you a loan that you don't have to pay back. You don't have to make mortgage payments on. The way I like to put it is this. The best loan in the world is the one that you never, ever have to pay back. The reverse mortgage comes in at a close second because you don't have to pay it back until a year after you have passed away. All right. So, I mean, that's really big. What that insurance also gives you is that growing credit line, regardless of what happens to the value of your home. It also guarantees against lender insolvency. Right? There are capped interest rates. So your rates you can't skyrocket. They are limited at the time, and there is full disclosure of costs. Every step of the way, whenever anything changes, we redisclose so that there are no surprises. All right. Also, my company services all of our loans. So what that means is people don't get passed around from company to company. Every month, people get a statement that you can see what's happened to your loan during the month. If how much interest has accrued, how much insurance, how much you have taken during the month. There's also, you have many options in how you take the cash with a reverse mortgage. We can give you a lump sum. We can give you monthly payments for the rest of your life. It's called a 10-year payment. We can also give you payments for a set period of time if you like. I usually recommend people going with the credit line. It's a line of credit where they can draw from it wherever they need it. You send in a request to us, and 5 business days later, that money is deposited into the account. So it's very flexible. You can get a combination of all of those if you wish. All right. So with that, reverse mortgage also, you know what? We started talking a little bit about using the money for home health care and aging in place. So a lot of people, I work in conjunction with attorneys like Andrew who specialize in this. And reverse mortgages have become very trust friendly. Right? We can work with revocable or irrevocable trust, and which Andrew is a specialist at. And it provides a layer of safety in the ownership of your property. And Andrew's going to go into that right now.
Thanks so much, Bill. Although I thought I knew a lot of things, I definitely learned a lot. Evans, do you want to get some questions and answers, or?
We have a couple of questions. I'll try and put them out there quickly. The first one's from Janet. She wanted to know, can you give us an idea of minimum income? And this goes out to Bill.
Sure. Thank you for the question, Janet. It depends on your expenses. And that is it's not an evasive answer at all. When we look at income, you need to be able to cover your real estate taxes, your homeowner's insurance, minimum payments on credit cards and installment loans. And you also need, if it's a single occupant home, $546 remaining in your from whatever income you have. So we qualify on gross Social Security. We can also factor in the money you are getting from the reverse mortgage, which helps out an awful lot because we look at the expenses post-closing. So if you're getting $300,000 from the reverse mortgage and that's going to be your credit line, I can consider that like you having $300,000 in the bank and then using that, breaking that down to a monthly number. What I would ask is, it sounds like something we would need to go into on a more one-on-one level, and I'll be happy to give you a more direct answer when I know some of those factors.
All right, we have another question from Carol. What is the upper age limit to obtain a reverse mortgage? And this is a three-parter. What if the property is a co-op apartment, and are their monies received as a lump sum?
Okay. Carol, there is no upper limit for a reverse mortgage. I did a loan for a lady about 5 years ago. She was 103. Yeah. She needed the money for home health care. So with co-ops, we can't do them right now. There is one company out there, and once again, if you want to take this offline, I'll be happy to talk to you about it. One company is doing them. They haven't closed one yet, and they've been doing them for about 8 months.
The co-ops have to be FHA approved, right?
Well, no, it's co-ops. Well, there's a lot to the co-op reverse mortgage issue. First of all, the board has to allow it. First of all, and that can just change from building to building. It's taken a long time. They used to allow them a long time ago, about 20 years ago. They used to allow them, and then they stopped. And we're having trouble getting it restarted as an industry.
Can I say, do condos fall into the same category as co-ops for this question?
No, they don't. Condos we can do, providing that they meet the criteria of the FHA with having, we can do different types of approvals. We can approve the whole development, or we can do what we call single unit. The single unit approval is a lot easier to get, and the homeowners associations tend to like the single unit more because it makes it less strenuous on them financially with reserves. They don't have to report to the FHA every year if we do single unit.
Bill,
Great question, though.
We have a couple of questions coming in, so I'm going to try and rattle them off as fast as possible.
Sure.
I'm 73 living, and this is from Dolores. I'm 73 living in a single family home. Approximate value is $750, and the mortgage is $1,891 per month, and I owe about $192,000. What would be the benefits for me or minuses Me and the missus, I think that's what that is.
Minuses.
Please thank my accountant advised me not to do this.
Okay.
Your accountant advised her to do that.
To do this, sorry.
Okay. Very good. Very good. All right. So a lot to unravel with that. So with a value of 750 and your age being 73, we would have more than enough proceeds to pay off your mortgage. What are the benefits? Well, the benefit is that you wouldn't have to pay that, well, at $1,793, that mortgage payment, you wouldn't have to make that anymore. You could make it to us if you want. Please remember that you would still be paying your real estate tax and homeowners insurance every month. So I don't know what your real estate tax and homeowners insurance are, but you would probably be saving, I don't know, $1,000 a month in real cash, depending on what your real estate taxes are and homeowners insurance. So that's one big benefit. The other benefit is there would probably be a bunch of money left over in the range of 110, 120,000 that would be sitting in a credit line for you to be there whenever you need it. And that 120,000 is going to be growing year over year. So that can provide a nice layer of financial security for you. What are the minuses? Well, with a reverse mortgage, it's called, I'll give you the term is, it's called a negatively amortizing loan, which means that if you're not making payments on your reverse mortgage, your balance goes up. All right, so that's one of the reverse things about a reverse mortgage. Like usually with a traditional mortgage, your balance goes down over time. And with a reverse mortgage, it goes up. But you would have plenty of equity in your home. So if you wanted to, leave that as a legacy for your heirs, chances are that there would be a significant amount remaining for them. That's another thing we would really need to go into more. But it certainly seems at face value that you would be a candidate for a reverse mortgage. And if nothing else, just to learn more about it. Thank you.
We have quite a few more questions, but I'm going to swing this over to Andrew.
Sure.
And we'll answer everything else towards the end. Andrew, the floor is yours.
Thank you, Bill. Really very informative and definitely learned a lot. Thought I knew a lot of stuff, but definitely things have also changed in the last 20 years. I remember when they were first doing co-op loans, I remember when they first came in and then they disappeared off the face of the earth. And so maybe they'll get back on because a lot of people have co-ops, especially in this area.
Oh, yes.
But we're talking about, we're talking about using reverse mortgages to make money available for you to stay in your home. Like we're talking about long-term care. Long-term care is extraordinarily expensive. People want to stay home. They'd like to stay home as long as possible. This is their home. They've been there 20, 30, 50 years, and that's where they're most comfortable. But also studies show that staying at home and aging in place is a healthier alternative than going into a facility. So how do people do that when it's so expensive? One way is, they take a reverse mortgage and they get the money they need to pay for care and live at home. I'm sure the 103-year-old client that you had probably used some of that money to pay for her aids so that she can stay at home and age right there in place and be very comfortable. The other thing is, though, it goes hand in hand with the estate planning that people do to be able to pass their property on when they pass away to their family without it having to go through probate. And also, that is using some planning like doing trust planning. The trust planning also allows the person to qualify for Medicaid. They don't have to use up all of their money that they get for the reverse mortgage, before applying for Medicaid, because that was their equity in their house. That was really a loan. It's not income they have. And if it's, done properly, a home equity conversion mortgage or a reverse mortgage and a trust work well together, because the trust, it is a friendly, the loan is friendly to trusts. Many people, for a regular conventional mortgage, it's harder to get a conventional mortgage for a house that's in an irrevocable trust. And for it to be Medicaid compliant and for them to be able to use that trust to protect their home and get Medicaid, it has to be an irrevocable trust. So there is great advantage, because what you're doing is you're borrowing some money from the equity in your house. You don't have to use all of it up at all ever. And if you don't have a mortgage, and especially if you don't have heirs, you still want to be able to be taken care of for the rest of your life. That would be a plan that we would help you put together, because by preparing in advance and planning in advance, by doing some trust planning in advance, you are allowing for the fact that when you apply for Medicaid, there's a look back period. Medicaid has a 5-year look back for nursing home Medicaid, and for staying at home, they've instituted a 2.5-year look back, but that look back period has not gone into effect yet. So you're counseling people that they should, if they can qualify and they need Medicaid, they should really be considering doing it right now, because it's still under the older rules, and the look back periods and the penalties that those look backs create are not in effect. What do I mean by that? When you transfer property away, it's considered that you transferred away in order to qualify for Medicaid. And if you've transferred any property away during the look back period, like I said, for nursing homes, it's 5 years or 60 months. For right now, community Medicaid, staying at home, having aides come in to help you, the look back period really is 30. It's 30 days right now, soon to be 30 months when they implement the look back period. So the pandemic had several silver linings, one of which is it delayed the implementation of that look back period for community Medicaid. And it's still in place. And why you plan early is if you transfer the property and you're outside of that window of the limit, that look back period, then this transfer does not create a penalty. The penalty is something, they measure it in months, and you figure it out by dividing what you gave away. So if you have say you have a $280,000 house and you transfer that and put it into your trust, you divide that by 14, you now have a 20-month penalty, meaning that they're not going to give you any. If you have a $228,000 transfer, it's a 2-month penalty. That's how you figure out what the penalty is going to be. By starting earlier, you in doing the transfer to your trust, you avoid the penalties because you're passing and transferring your property outside of the look back period. And then you can put your house into you can get a reverse mortgage on your house, even though it has a trust. What happens often is that they require some changes to the language of your trust at most. As Bill says, they have people who read these the condo bylaws to make sure that they comply with the FHA rules. They have people who read these trusts and make sure that the trusts comply with the language that they need to have in there. But it's more and more friendly to this process as more and more people are doing estate planning and have the desire to take out reverse mortgages. So it really works very well together, especially when planning for long-term care, which, as many people probably know, and those who don't know, here's the surprise, that 70% of all people over 65 need long-term care. That is just a phenomenal number. It's not really a matter of if, it's a matter of when for most of us that need long-term care. And here's another lovely statistic, that 40% of the people who need long-term care are between the ages of 35 and 65. So it's not really only an old people's problem. People get sick earlier in life. People have unfortunate accidents and things like that render them to need long-term care. So planning like this is a good time for anyone who's interested in making sure that they give themselves the best chance to be able to qualify to protect these assets, the money that they are, earned and have accumulated from having to spend this all down in the event that you get sick. And, as we get older, most of us need help just, doing the things that we used to do, those activities of daily living. And that's what community Medicaid is really a lot for, whether you're going into an assisted living or you're going to get people to come help take care of you at home. Community Medicaid will pay for people to do that if you qualify. So, it's a great topic here because we want to hold on to our real estate. We want to make sure that our real estate gets passed to our family. By also using the trust planning, you avoid having the probate process, the courts of the state of New York involved in your family's life after you pass away, delaying the whole process too. Because if you have a reverse mortgage and you first have to get, and the person who dies, who owns it, there still has to be someone appointed, the personal representative of their estate, before you can even settle the issue of the reverse mortgage, because there has to be a person who is responsible, not necessarily the person who died, but the estate of the person who died. They are the official owner of the property. And there is still a probate process that has to take place, which is, basically alleviated by using trust planning. So you avoid probate. It usually costs you less money than probate does to do the planning. And it also goes hand in hand with getting you long-term care, and your reverse mortgage is friendly to it. So there's really no reason not to do planning because, and 60% of all people don't have plans. So that's why we do the Ask the Pros, because Evantz and Dean and Tushanna know that, real estate is really a very significant asset for most people, and that most people don't even know what happens when things don't go right in your life. Like dying is something I consider not going right, or, getting really sick is not going right. What plans do you have if those things are going to happen, right? So there's a lot of factors that you need to take into consideration. And on our regular podcast, we're trying to educate and help all of you understand what you're facing, because it's really, most people don't know these things. They don't teach this to you in high school. There's no college class for reverse mortgages or estate planning and things like that. So, that's why we love our Keller Williams Realty people who are helping us, be able to educate all the people who are on here tonight. So thank you for coming and giving us a chance to speak with you. And it's back to you, Evantz.
Nice segue. So I guess this is the portion where we talk about, you thought about pretty much keeping the property. We want to talk about that part, basically. We talked about that already. Now we want to talk about possibly you want to sell the property. What are the steps to do that? So Tushanna and Dean are going to talk about that right now. So Dean, the floor is yours.
I wanted to mention that real estate at times is something that you want to do, meaning buy or sell or move up, move down, move out of the area, whatever you're looking to do. So it's a dream and it's a goal. There's other times when real estate is not a goal. It's just something that comes up and you have to move. So the reason that we do these series is not just to educate you for when you want to move, but for also educating you for what happens if you have to, or in the event of something. So that's what we're trying to be as helpful as possible with these series that we're doing. Bill, you did a great job tonight. You too, Andrew. If I'm always learning stuff. I've been doing this a long time, but I listen, to what is being said here, and it helps me to share with our buyers and sellers questions that they have for starters, and then I refer them to the pros also.
Very good. Thank you, Dean.
Donna, you want to add anything?
Thank you. This is so informative, and I think one of the things that we love about, as Dean said, we like to be valuable to our everybody in our database on our sphere. So I think this is one thing that we can help people to have clarity to make an informed decision for their family and their heirs.
All right, awesome. We have a couple of questions. I wanted to go back and circle back to that. So let me go back to the questions. While I'm reading the questions, if anybody has any questions, feel free to put them in the Q&A, and we might grab one person and make speak live. So the first question we have is from Angela. Sorry, I'm not wearing my glasses right now. If my husband dies, who signs up for the reverse mortgage? Wait, if my husband...
Do you want me to read it?
Yes, please, because I can't see anything on the screen right now.
Okay, so if my husband dies, who signed up for the reverse mortgage and the wife wasn't at the age when he signed up for it, does the wife have to leave the home even if the insurance and taxes are paid? I think we had mentioned this earlier, right?
Sure, but I'll be happy to go over that, Angela. Back in the old days, it would be a problem. It would be a problem for the surviving spouse. But now, as long as when the application is completed and the loan closes, you are listed on the loan as what is termed a non-borrowing spouse, meaning that you're not old enough to be a borrower, but you were married at that point, you're termed a non-borrowing spouse. Should your husband predecease you, you will be able to stay in the home for as long as you like, providing that you pay the real estate tax, homeowners insurance, live in the home as your primary residence, and perform basic maintenance.
Okay. And the next question is from Robert, who says, when is a better time to take a reverse mortgage? High interest or low interest environment, and why?
Interesting question, Rob, and thank you. There are benefits to both. It depends on what your play is. Lower interest rates mean higher proceeds for borrowers. All right, so that in itself is a benefit. So if you're paying off a high value, if you're paying off a high balance mortgage, low interest rates would be preferential because it would give you more proceeds to do so. If your play is a long-term play and you don't owe much on the property or anything, because I've been doing a bunch of loans lately for people who have no mortgage and high value homes. And their play is this: they're getting the loans when they're in their mid-60s in anticipation that they might need funds for long-term care in their late 70s and into the 80s. So what they want to do, Rob, is they want to have this credit line grow at a higher rate as possible for the next 15, 20 years to maximize that amount down the road. So like I said, there are benefits to both, and it's a very subjective answer there. It really depends on the individual case. But great question. Thank you.
Okay, and Janet is saying, can you quickly explain what happens once the owner of a reverse mortgage die? Like, how does that work with the money owed?
Certainly. I'll take this. I'll take this one. When the last borrower passes, the loan is technically due and payable right then. But this is the procedure. You should a surviving family member should reach out to the servicing company right away, certainly within 30 days. And the servicing company is going to send a letter. And it's going to say words to the effect of, we're very sorry to hear of the passing of John Smith. Please be advised that there was a reverse mortgage on the property located at, to let us know what your plans are for settling the loan. So you call up and you'd say words to the effect of, they'd ask for a death certificate and what they call letters testamentary. Something that shows that you are legally able to handle the affairs of the estate. And when you give that to the servicing company, they are going to give you a 6-month extension. Right there, they're going to give you 6 months. And you can say, well, we're not sure what we're going to do with the home. We might keep it, we might sell it. 6 months down the road, the servicing company is going to call you. And I'm going to say, 6 months ago, you said you weren't sure about what you're going to do with the home. What are your plans? And you can say, well, we listed it with a realtor, just throwing it out there. So they're going to say, great, please send us a copy of the listing contract. And you send a copy of the listing contract. All right. They're going to say, thank you very much. Here's another 3-month extension. So now you're at 9 months. They're going to reach out 3 months later and they're going to say, 3 months ago, you said you listed the property. How are we doing with that? And you can say, well, okay, well, we're in contract. All right. So they're going to say, please give us a copy of that sales contract. You send that and they're going to say, congratulations, you have your final 3-month extension. And so it brings it up to a year. So the loan needs to be settled in a year from the passing of the borrower. I hope that answers your question. I tried to be as thorough as possible.
Okay. Andrew, this one is for you. If you create a irrevocable trust, how can it be modified that it complies with the lending terms or language for the reverse mortgage? This is from Angelica.
Usually you do an irrevocable trust. The person who creates it doesn't have much power to change things. But if you deal with someone who deals with that problem, we put in facilities like a thing called a trust protector or a trust advisor that can make the necessary changes to the trust in the future. So there's ways of making sure that to make sure the trust that I create always work. I always make sure that there's someone who can make those changes. They don't have any rights to deal with the property or give the money away or deal with the things that would affect, say, eligibility or asset protection, but they do enable changes to be made as necessary when like in that instance, when you have a reverse mortgage lender who wants to change some of the language, or cooperative. There's a when we're dealing with co-ops, we find that they often want us to change language of the trust that we've created.
Thank you. Bill, can you refinance a reverse mortgage?
You absolutely can. When rates were much lower a couple of years ago, actually 60% of all reverse mortgages were refinances. We were dropping people's interest rates down 2 full percentage points, giving them access to a significant amount of money. And when you do it the second time, it's cheaper. We can credit back a bunch of the costs. And by the way, something that I've neglected to mention in the 25 minutes that I was speaking, I should be ashamed of myself. All of the proceeds from a reverse mortgage are tax-free. It's all tax-free income. It's not income. So it's really great benefit.
You mentioned earlier about money coming in from Social Security or Medicaid. If you're taking a reverse mortgage, would that affect the amount of money you're getting from Social Security?
Excellent question. No, not at all.
Andrew, or do the lender have to approve your home if you want to put it into a trust? If you're having a reverse mortgage?
That's also a great question. So you would think that because there's a due on sale clause in most mortgages, and that a transfer to a trust you have to have a deed and do a deed to transfer that, you would think that might be a problem. But specifically by federal law and the bank and the controller, the federal controller's rules, that the transfer into a trust in which you have a beneficial interest does not trigger the due on sale clause. So, most people think that you need to go call your bank up and say, can we please do this? In which they say, no, you can't. But no, you don't have to do that. And bankers give irrevocable trust a hard time, but, it's really it would be simple to deal with the situation by creating another document or two to make sure that it complies in all ways. But they refuse to do so because it's a little bit outside the box that they want to deal in. And I think the second part is that the secondary market is not friendly to purchasing loans that are to irrevocable trusts. But they are great tools for planning, and they're great. It's not impossible to get a conventional mortgage, and it's certainly relatively easy to get a reverse mortgage. That's the nice thing about it. The reverse mortgage is meant for people who are over 62. So they're already the type of clients that are interested in long-term care protection and issues. So it's nice that there's this friendly way, quote unquote, as friendly as a bank and a trust can be, is a friendly way that, these things interact with each other so that more people can take advantage of that.
Okay. Bill, in under 30 seconds, can you get out of a reverse mortgage?
Absolutely. You can sell the property whenever you want. That home is yours. We are just a lien holder. So you can sell the home whenever you want. We would get paid at the closing table when you sell the property, and you're done.
So before we leave, I want to make sure that everybody has our contact information. Bill, how can they reach you if they have any questions about reverse mortgages?
My cell phone number is the best. I've had it surgically attached to my ear. It's just easier that way. My number is 91.
Okay, awesome. It's also in the chat as well, so feel free to copy that. And Andrew, if they have any questions about probate, irrevocable trust, I can't even say that. Wills, anything related to estate planning, how can they reach you?
They can reach me at the number in front of them, 718-514-2066 or info@aljlaw.com.
And Tushanna, how can they reach you if they have any questions about real estate, either buying, selling, or investing in real estate?
My number is 347-358-4822.
And Mr. Graber?
Give me a call anytime, 516-527-9549.
And for me, it's very easy to find me. I'm all over social media. This will be recorded. It will be on our Facebook page. It will be on our YouTube channel as well. Our website is mynyhomesales.com. This will be on there as well. My number is 917-975-5985. And the lovely Tiffany, would you like to give us any parting words to the audience?
Thank you so much for joining us.
In the chat, you'll see our contact information, so feel free, copy, paste, or take your camera, take a picture of it. If you have any questions about real estate, about estate planning, about reverse mortgages, that's what we're here for. And you will be getting a survey, so feel free to answer the survey questions. We want to know how we did, and we want to know if you want more content like this, and feel free to let us know. Give us your honest feedback.
Yeah.
Bill, Andrew, this is a heavy subject, so you guys got the floor.
It's just really been an honor and a pleasure to be speaking to all of you, and I think that the turnout that we get here time after time, it's growing. Obviously, Evans being out there on social media is a great thing. That's a face that everybody recognizes, and thank you, Bill. You're absolutely the reverse mortgage expert that I know, and it's just been really great. As Tushanna said, I learn a lot of stuff when I'm in the room with someone like you. So thank you very much.
Oh, thank you. I appreciate that. And from me, Evans, everyone, thank you very much for your time. I truly do appreciate it. And I appreciate everyone on the panel and the wizard behind the curtain as well.
For the rest of my team, Dean, Tushanna, this is Thanksgiving time frame. So we want to tell people how thankful we are basically for doing this, for the panel, the rest of the panel, for doing this stuff. So you want to say anything to the audience?
I just want to say that, like I said, we want to be helpful to everybody, and we have a lot of past clients, and have a lot of gratitude for all of them and their families. And I appreciate everyone who takes a moment or the thought to give us a call to see if we can help them, because helping them actually, it feels good. So I like doing it.
I am very thankful. I get to wake up and come to work with the two of you today. You guys helped me, the best version of myself, and I love helping other people too. So,
I also want to thank everybody and wish everybody really, in this crazy, crazy world we're living in right now, we do all have a lot to be thankful for.
Yes,
and prayers to those people in the places where it's just not safe to be. So thank you all, and thank you guys and gals, and I appreciate it, and hope everyone has a good Thanksgiving holiday.
Thankful for all of you. It's been an absolute pleasure working with all of you. It's great to be with Amelia with what they do. And I am so thankful I work for the estate planning and elder law group. All right.
Well, I'm Evans. I'm going to have the last word. I just want to say thank you all for watching this. Thank you for constantly giving us feedback, letting us know how we did and what you want to see, what you want to hear. And I also want to say, remember, people, to be good to each other. And that's pretty much it. Just be good to each other.
Yep.
With that being said, have a great night.
And one more thing,
Sure.
and be good to yourselves too. Be nicer to yourselves.
With that being said, when you're being nice to yourself, you're being good to yourself, you're planning for the future. So make sure you have a plan for your future and your family, which is, bring it back to this. Tiff?
One more thing. I spent a lot of time building that survey. Please fill it out. Let us know.
Yes, we're very thankful for Tiffany for putting that survey together. So please,
Yes.
please fill that out, people.
And if you felt like this was the most amazing thing you've ever experienced in your life, write a review. Go on Google. Say how brilliant these professionals are. It really makes a difference in our lives. Thank you.
Thank you.
Wonderful.
Thank you.
All right. I'm going to say good night, John Boy.
Good night, everybody.